Hi, welcome to valuationpodcast.com, where we discuss all things related to business and valuation. I'm Melissa Gragg, a company valuation expert in St. Louis, Missouri. I have the pleasure today of discussing COVID-19 business interruption insurance claims with Chris Johnson. He's an economist in Houston, Texas, with Economic Analytics Consulting. He also does valuations, and that's kind of where we met. Welcome, Chris.
Well, hi, Melissa.
How are you?
I'm doing great. This is the special at-home version, like the late night show host, right?
Yes. Hopefully we don't have any crazy kids running through the back of the screens or anything. But
I have a middle schooler learning cello if you would like a special guest appearance. It produces excellent sounds.
Right. Well, let's get straight into it. Really, this is kind of a hot topic for businesses right now that are going through some issues and have lost some business income. But just tell us typically, what is business interruption insurance and what does it provide?
Absolutely. So it's really a separate policy or an addendum to existing insurance policies that really covers what you said. Lost business income. So you're looking at an insured event or a peril that occurs. What you have through your normal policies, if there's a fire and it burns down your building, the other policy is going to rebuild your building. But what happens if your business is out of operation during that time period that they're rebuilding it? So that's where business interruption coverage comes in, and that it's going to help make you whole in the lost income that you've lost. Now, it also covers any of your mitigation expenses that you had to incur. So when you try to do something to mitigate the loss, whether you're mitigating a physical loss or you're trying to redo your business operations, it can also cover some additional expenses if you have to acquire new equipment and try to continue your operations as best you can to mitigate those losses. It'll make up also your existing obligations and payments. So rent, mortgage payments, other expenses, taxes, payroll that you have to incur during the time period where your operations are down. And it's really just an additional policy that's going to try to help make you whole when a covered event occurs.
And so typically the people, that have business interruption coverage have kind of have it as an addendum, like it's an addition to your normal business insurance, right?
Usually, sometimes it's included in a standard policy. There's a little bit of coverage that's in there. Other times it's a standalone. Most of these policies are not large policies. They're subject to waiting periods of like 1 to 3 days, and then there's a restoration period. So it's not going to cover your, trying to get your business back on track over a period of years, but it'll typically be something on the order of 12 months or less. And so you've got this time period that it covers you. The limits are not always very high. They're subject to deductibles like most insurance. So a standard policy may include a level of business interruption coverage. A lot of people that are very concerned about it, they'll go and get their own standalone policies. Related to this, and as we start talking about the COVID aspects, there are other similar policies, including pandemic policies that were put into force within the last decade, as we've seen various different pandemics around the world, just different options that were offered by the insurance companies.
Right. And I was reading a little bit, and we talked about this earlier, but like Wimbledon had canceled for the first time in 45 years. But I guess after the 2003 SARS outbreak, they bought pandemic insurance and had paid like $2 million a year in the policy, but it ended up paying out a bunch. Do you see that, one of the questions that we have is, will COVID-19 or this coronavirus business interruption claims actually be covered or eventually paid by these insurance companies? What are your thoughts on some of that?
You've got both questions in there together. Yes, I think a lot of these claims will ultimately be paid. The Wimbledon one's a very high profile event. I think that'll be paid on the earlier end of things. Most businesses, however, have a long road ahead of them. That is my prediction. We've already seen quick searches through Google will show you most of these insurance companies are issuing preemptive denials. They're publishing on their website coverage for a pandemic, coverage for COVID-19 is not included in your policy. So when we talked about what is a business interruption policy and what it covers, we talked about that covered event. Most insurance companies are really deciphering and describing that as something related to a physical loss. So the example that we talked about was a fire, and that's very deliberate because that's a physical loss. A fire burned down your building. So you physically lost the building. With a pandemic, with COVID-19, the coronavirus, nothing was burned down. Is there a physical loss? Your building is there, your equipment is there. Is that the same? And so what we see is a lot of people, a lot of insurance companies already saying, no, it's not going to be covered. Even some people with pandemic insurance coverage that specifically say the variation of the SARS virus that generated this is included, they're denying those claims as well. I think once they go through a round of litigation, we're ultimately going to see a number of these claims being paid out. There's also significant talk about states and the federal government stepping in and writing different levels of legislation that's going to help govern how this is interpreted. Now, the legislation can't force a change in wording in the contract, but it can instruct the courts on how to go about interpreting it. And I think that's ultimately what we're going to see is either some of these consolidated or some rulings that are going to come down, and based upon that, everything else will fall into place. But some people have coverage that they didn't expect that they had, and a lot of people that think they have coverage really do, but they're going to have to work their way through a couple of denials, and then ultimately I think they're going to get a lot of these claims paid out.
Gotcha. Well, and I think that, we talked a little bit earlier. Basically, you have about 100 cases filed, 101 cases, I think, filed in federal court. And that's not including what's been filed in state court. And you have attorneys, a lot of these insurance attorneys, plaintiff or defense attorneys that are kind of arguing back and forth about whether this is actually going to be enforceable. And that's where I think you said the legislation is also coming about. Do you see this? Is this legislation, though? Some of it, what I'm reading, is it saying that it's going to force the insurance companies to pay out on some of these policies. Do you think, but you're saying maybe they'll just have to move them into the court system?
Well, as you know, you've done a lot of litigation as well, but once the courts have a series of rulings that are out there, it tells you that there's no reason to continue fighting or having these disputes because we know how they're going to rule. And so I think technically they can't change how the insurance companies view the wording of their contract and force them directly to pay out. But by telling the courts how to interpret it, it will ultimately show how they should be interpreted. So a technical difference, but roundabout, you're going to end up in the same spot. I think some of these will start to get paid out. But a lot of this is going to stem from the fact it's going to depend on individual policies, these individual policies and their specific wording. The big thing in everything right now is centering around physical loss, where the insurance companies are saying business interruption is triggered by a physical loss, and policyholders saying, well, not all policies, or you didn't define physical loss. And without a definition of that term in the contract or the policy, it's going to be something that's able to be litigated, and then we'll head into the courts. So then it's a function of understanding and interpreting what is going to be allowed for the definition of physical loss. And even going back before the pandemic started, courts had interpreted and allowed airborne smoke, bacteria, and other contaminants to be interpreted as physical loss. So there is some level of precedent that this may be allowed and may be interpreted, which will then trigger these policies to become valid and cover losses that are related to it.
Well, and in connection with that, there's also a concept which I don't know if I completely understand, but like civil authority, is that, when some of these states, or pretty much everyone, has put into place the stay-at-home orders, or that you have to close businesses, does that have an impact on some of these claims as well?
It absolutely does. It's just a different basis and measure by which the coverage can kick in. Sometimes that's going to be included in a standard policy, a business interruption policy, or there are yet again different standalone policies that are going to provide that coverage. But understanding what your basis is, what your policy documents say and allow, is incredibly critical to understanding how you can prepare your claim, very specifically what life would have been like absent this quote covered event. And so if you have a civil authority policy, what you're saying is my event that's triggering coverage is the closure by the governmental authority. But that means when I do my claim, it's what would I have earned? What would my income have been absent the covered event versus what was my actual income? So it's commonly called a but-for analysis, or a with and without. So what would I have done prior to or without the covered event versus what actually happened? Well, your definition of what is the covered event is critical, because if your covered event is without the pandemic, my business would have continued operating like it does every single year. But if you are talking about a coverage level of governmental authority or government mandated shutdown or stay-at-home order, whichever flavor you're using, well, your but for or your without event is still a world with COVID-19. And understanding what your business would have been, what income you would have produced in that situation is not normal, is not standard. It's not simply going back and pulling out your standard annual forecast, looking at your business documents. That's the normal way that you operate. That's not going to work, because those aren't accurate anymore. Those have to be adjusted and updated for what would have happened if there had still been a pandemic, but perhaps the government hadn't mandated people to stay home or mandated you to shut your doors. Would you have still been business as normal? If you were a restaurant, would you have still been at full capacity on a nightly basis? And the answer is probably not.
Well, and I think that's one of the difficulties, is forecasting it or understanding the loss. But there's also a concept of like the recovery period or the loss period. And, in some of these cases, you have 100+ cases that have already been filed. And do we know when the loss is going to end? Do we, what if that's not written specifically in that claim? Right, then you kind of have this open-ended.
Well, but it's not open-ended, because
Okay.
you have a recovery period in your insurance. So
Okay.
your point is very valid. The point of any insurance coverage like this is to make you whole. But what if the loss continues past your recovery period? You're not made whole, but you can quantify your loss during that time period. So if you're able to return to where you were within 12 months, it's great for the business owner. There's no more continuing loss. They're able to file a claim. They're going to be made whole. That's excellent. If the loss continues past the recovery period, it is problematic for the business owner, because their coverage is for a specified period of time. So it's really, really important that you understand the details and look at the requirements and specifications of your insurance contract, your insurance agreement.
So let's talk a little bit about what business owners should do now, because I think a lot of business owners have tried to do like the PPP loans or the EIDL loans, but this is another avenue to try to bridge that gap of losing all your income and how do we get whole, like you said. So what should they just read their insurance claim? Should they talk to their insurance agent? Should they talk to somebody, an expert like you? Like, what's their next best step?
All of the above is actually pretty good. But step one, dust off your policies, pull them out, make sure you can read through them and look and see what coverage you have. You first need to see if you have a level of business interruption coverage. Do you have one in your standard policies, or did you buy business interruption policy? You need to look and see if you have that first. If you did, you can always talk to your agent. I'm hearing that most agents are just repeating a lot of things that are being said from the insurance companies. This is going to be denied. There's no reason to file a claim. Don't spend your time and effort. That's probably not the best guidance for a business owner. You should look at filing your claim. You can start by doing it yourself. You can start gathering the information. But depending upon how your policy reads and what you need, you may significantly benefit from getting some help. What if you need to reforecast how your business would have performed under this alternative scenario where there's no government mandated shutdown or stay home orders? You need to be very careful in looking at how that's going to be put together. You need to document it and you need to support it so that you can file that claim. And since most claims are getting denied, you need to be prepared that it's going to go into litigation. So you need to understand what your coverage limits are. Is this going to be worthwhile? Is this something we want to pursue? But at the same time, don't take too long. Look at your documents, look at your policies, look at your time period. Do you have a 90-day time period by which you need to file a claim? Well, what was your covered peril? When did it start? If it started in February or March, since we're recording this right now at the end of May, your clock is ticking pretty fast. You need to be looking at filing a claim. You need to be looking at getting some help. If it's a government mandated shutdown order, those came in stages. So depending upon where you are in the country, your time period's a little bit different, but you do need to take a look at it. You need to be looking at this and trying to be proactive on it. But to expect that you're going to file a claim and just get paid like we're expecting will happen with Wimbledon, I don't think that's going to be what commonly happens for business owners.
Well, and even in the situation of Wimbledon, the payout may only be half of what they anticipate their losses are. So it's not even potentially going to get them whole, but it's something. And I think that some of the business owners that I think something that they have to consider, and you tell me if this makes sense, but what if you weren't making a whole ton of money before this and you weren't really, maybe you were profitable and then you lost some money and then you were profitable, is that going to have an impact on you claiming that, the future would have been so rosy, or what do you think?
It absolutely will. This is not an avenue by which there's an instantaneous payout. That's not the way this works. What you need to do is look at how your business was performing prior to this and what it was supposed to do. Your best reasonable estimate as to how it was going to perform. But you need to take into account any number of things that should have been in your forecast for your business operating purposes. But you need to look at the environment that you're in. You need to look at the standard economy. You need to look at your specific industry. You need to look at your geographical region. All of those things factor in and have an impact on your business operations. And so if we look at this from a large macro perspective, a lot of prognosticators were saying that 2020 was not going to be a great year in the financial markets or for the economy as a whole. A lot of people were projecting a downturn. Do your forecasts take into account those potential aspects? Or were you projecting up and away, incredibly rosy things? If so, that doesn't mean it's wrong, but you need to be able to support and prove what you were doing as a business and how you were going to achieve those results. Having a history of forecasts and achieving them can be incredibly helpful because it proves up your predictive powers. We've been doing this. We prepare forecasts on an annual basis. We've met or exceeded or been close to them on an annual basis for 5 years. That's excellent proof to help document and substantiate your claim. But just turning in, preparing something now that was a forecast that you should have prepared previously and turning it in, that's going to get a lot of pushback from the insurance companies because these claims are going to need to be more detailed, more documented, and more substantiated than what are sometimes called more simplistic or easier claims when there are covered events like a fire, a flood, or flooding due to pipes bursting, et cetera. These are going to be different, and they're going to have a lot more scrutiny associated with them.
Well, and a few more questions. Let's just assume for a second, because right now we're talking about COVID specific, pandemic specific business interruption claims, but the business interruption insurance is really something that business owners should contemplate in general. Like this discussion of some of the difficulty in the claims is because it is has to do with COVID-19, right? But if we were just looking at a standard or a regular business interruption claim, what is this something that business owners should start looking at? Considering, is it going to be exponentially more expensive now that we've gone through this pandemic? Where do you see this if we were just talking about traditional claims? Like, what's different, I guess?
Well, lots of questions embedded in there, but let's
I'm sorry.
Let's take a look at this. Let's unpack it a couple pieces at a time.
Okay.
What should a business owner do should this change their decision going forward? In some respects, no, it shouldn't change their decision going forward from a macro perspective, from a big picture perspective. They should always be looking at their business, their risk tolerance, and understanding the products that are out there that will help them achieve their desired financial results. If they have concerns about how their business could be interrupted for various covered perils, and if that would significantly impact their business, they should consider business interruption insurance. Has anything happened that should encourage them to consider doing it very differently? Well, the answer to that is maybe, because what if now they have a better understanding that pandemics that we've seen spreading around the globe in the last 10 to 15 years, we never gave them maybe detailed thought here in the United States because they never hit the United States the same way they hit other countries. Is that fact alone enough to cause you to purchase pandemic insurance or a business interruption coverage that will cover an event such as a pandemic? Yes, you might better appreciate how your losses, how you could gain losses from these types of events, and maybe they occur more frequently than you thought that they could. I know a lot of service and hospitality businesses are definitely going to be impacted by this, and they may be thinking about how things are going to be different for them. There are other types of policies too that maybe you didn't understand or appreciate how much you were affected. They have a variety of different names, but they deal with dependent or businesses that generate demand for you. So a lot of hotels, restaurants, hospitality developments and groupings, so strip centers, shopping areas that are near large tourist events. So in Florida, near the big amusement parks, near professional sports stadiums, in shopping malls and centers where there's a large anchor store. These dependent business types of policies, when those large businesses shut down, it has a negative ramification on the others. If they didn't understand or appreciate that a lot of their customers were driven by those other companies or businesses, they may have a better understanding of it now. They may now, since they have that better understanding, they may want to institute or gain those policies. But is it significantly different? Is it significantly harder? In concept, no. These claims are very similar in concept to what they would be if an apartment complex had a fire that burned down one of its buildings. It lost income because it can't rent those apartment units during the time period for which is being rebuilt. That's a major loss of income that significantly affects the financial results and operations of that business. That is something that is a more standardized claim. There are a lot of people that are used to preparing those claims. The concepts that are applying there will apply here for COVID or coronavirus related claims. But the level of documentation and support is what's going to be different. And in that but-for example, the with and without, what would have happened absent this covered peril, that's what's different. It's not just business as usual in all cases, especially with a government mandated shutdown or stay home order. In that case, it is what would have occurred still with the pandemic going on, and what would customer demand for my products and services have looked like. That is unlikely to match the standard forecast that you prepared coming into 2020. And you need to be very careful and understand that you can't just, under that specific situation, you can't just turn in your prior forecast and say, this is how my business would have fared. This is the income I lost because I had a full shutdown. And I took all these expenses to mitigate. So my mitigated expenses and my lost income. Well, no, because your forecast is based upon something that's not the alternative world, that but-for world that we need to examine. And you need to sit down and look at it very carefully and make sure that you understand how the business would have operated at a likely reduced capacity. And it can be very helpful to work with someone to help develop those forecasts, but they're going to rely upon you as a business owner, your knowledge of your specific business, your competition, your customers. You are going to play a role in this, but getting some help by someone that's used to focusing and narrowing down your focus on these specific issues can be very helpful.
Well, and you touched on a topic that we hadn't really previously talked about, but your duty to mitigate. Can you just tell us a little bit more about like what is the business owner, like not necessarily what's their duty, but what does that language in an insurance policy mean?
So all language varies. Take a look at your policy. I don't want to generalize on this very important point, but in concept, you need to look at what your business is and what's happening and what you can do to mitigate. So one of the simplest examples that we've seen around the country, how is an insurance company going to handle a restaurant that had the ability and option to turn to takeout and delivery that chose not to do so, or tried to do so, was dissatisfied with the results, and has temporarily closed until they can reopen at a later date? Is not necessarily that every situation is going to be the same. But what's going to be important is that you document and support the decisions you made and show why the decisions you made were the appropriate ones. A high-end restaurant may have a much, much more difficult time supporting a takeout or delivery business than a smaller restaurant in a strip center that had an existing delivery business, but it was a very small part of its revenue. They're very different businesses, so one answer doesn't fit all. But if someone tried it and had significant negative results, it may not be worth the time and effort and expense associated with it. So you're going to need to document that, prove that, show that, and say, look, this is why my losses are what they are. This is why a component of my loss, I didn't have significant income in actuality because we tried this and it wasn't working. The amount of cost that we had to play, we weren't covering enough of our costs. We were continuing to lose too much money. The lesser loss was just to shut down. Those situations will exist, but you have to measure carefully, document, make sure you can show what you did and support that financial decision that you made.
Well, and the reality is a lot of these pandemic insurance claims may have to be fought and won in court. So the documentation process is going to be pretty significant, as well as starting to reach out to people that can help you, either attorneys, experts such as yourself, that have that not only just understand the claims that are happening now, but you have a history of understanding business interruption claims in the context of court, not just sitting, at the desk. But do you think that that's really where this is all going to go, that we're going to have to fight them in court? Or, are the insurance companies just going to kind of be like, okay, here's a check?
I think the greater likelihood is that these claims are going to court. You already gave a statistic. I think through last week, over 100 cases have been filed in federal court alone. That's not even tracking the state level cases. They're trying to consolidate some of them. There's some people wanting it. There's some people fighting it. But in short, insurance companies are denying a large amount of these claims. Well, if they are not happy with the denial, they're going to have to litigate it. Now, what happens after the first round of litigation? Will everything require further litigation on each and every claim? Or will the dominoes start to fall and the insurance companies say, why would I take the expense to take this all the way to court when I know that I'm going to lose? They may just start paying out. They may reach settlement agreements premised upon the rulings of the courts. We don't know exactly how that's going to pan out because it hasn't happened yet. But litigation is going to play a critical and crucial role in determining the outcome of this. But the big wild card is what legislation is going to come down at the state or federal level, and what impact will that have? Will that short circuit and stave off many of the litigations and basically give them an answer and show them how the claim should be paid or settled? There's a lot of uncertainty about that right now. We don't know what changes or new policies or legislation is going to be enforced or come into place. Is it going to be something along the lines of the PPP loans, which in the beginning were designed economically to really be federal payment of unemployment benefits instead of going on the state records? They were designed so that you would continue to pay your employees as much as you could over a set period of time instead of having them go on unemployment. Over time, those policies have changed, and the rules and adaptations, and people are interpreting them differently. So how will it evolve? What will happen? I don't mind making predictions and looking at things, but I've learned over the years I will never predict what elected officials will do. That is far too complex for a humble economist to try to predict.
Well, and you bring up a couple really interesting points. One is the PPP and the idle loans and all of the regulations surround it literally change every day. Like even in the past 24 hours has also lessened. But one of the things that I thought was interesting that you said that also has to do with this is that some of these cases we don't know yet, because everything's going to change in this space as well. But some of these cases could be consolidated, maybe on a state basis. And so if it is something significant to the business owner, reaching out to an attorney and making sure you make that claim in that 90-day period or whatever period that you have to make it may be important if they do get consolidated and there's some more blanket payout, which again, if you talk to people, that's a 50-50 chance of what can happen, right? But it may be good to start talking about some of these issues now than to wait for it when you don't have any choices.
A lot of that's very true. But first and foremost, we have to be very clear on this. Pull out your policy, read your policy documents. If you have a window to file a claim and you don't file within that window, you have a problem. It is unlikely that you will be covered. You need to follow the governing document of your specific policy and make sure that if you have obligations that you meet those. Now, once you do that, that's the most important thing to preserve your rights. After that, you probably need to take a look at what your other options are. Is it possible that they're going to regionally or on a statewide basis aggregate some of these together and put them in front of fewer number of judges instead of scattering them across the country? Yes, it's quite possible. But people are fighting that both for and against it. So how will it actually play out? We're going to have to wait and see. As with many things in our business lives these days, there's a lot of uncertainty. We need to see what happens next. Every day, every week, we learn more. With the PPP loans, sometimes we learn these rule changes are applied retroactively as well. So just when you think you understand something, they change it. Just when you think it applied to you and you understood what was applied to you, sometimes it gets changed. Flexibility is the key, but looking at your documents, understanding your policies, looking at your language. There's a lot of ways that this could be triggered, whether it's a general policy, a specific business interruption policy, a pandemic policy. Different policies with different names and titlings are going to cover different governmental authorities. If you have a policy that's going to cover you based upon that you're a dependent business based upon a larger business nearby, look at your policies, see what your coverage levels are, see what the rules and regulations are that you agree to in your policy, and make sure you follow them to the best you can.
This has been really, really amazing information. I have been telling a lot of business owners that because a lot of us are still working from home, or, some of our work-life balance has started to not be as balanced, that I've said to business owners, like, reach out to some of these experts that know this stuff, because the reality is, there's a lot of questions and there's a lot of things changing. And so, we're going to provide all the information that they can contact you directly. And, most of the time I just tell them to call you anyway, or to reach out to you, because you really have extensive knowledge, not only in business interruption, but commercial litigation. When a company sues another company, and you also do business valuations. You're located in Texas, in Houston, Texas. So, all of those good things. But in this type of situation, I don't know if you need to have somebody in your specific location, although some of this could start to be state specific. So, things that are happening in Texas could be different, but I think reaching out to an expert that understands this is a really good idea, while we all are accepting calls more readily since we're locked down at home, right?
Yeah. So I think the key is not necessarily where somebody is based, but what their experience is, what they have experience helping people with and understanding. So making sure that they have experience in those industries with those types of claims, and that you're finding someone that is really going to provide you the level of care and help that you need. If you decide that a claim is something that is too challenging to prepare, something you're not willing to prepare on your own, that you just want some help, whether you want someone to assist you with the claim or do the entire thing for you, be prepared to play a role in it. You know your business better than any other person outside your business. That's why you're in charge. It's your business. But you need to bring that understanding to bear and to help someone put together the best claim that they can. So geographically based is good, it's helpful, but we all do business across the entire country. It's really a function of making sure that they've got the knowledge and experience and the skill set to help you achieve the results that you desire. A lot of these claims are going to be different than standard business interruption claims. This is not, there will be some that will come out pretty simple, but I predict a lot of these are going to be based upon, you can't just pull off your forecast or last year's financial result and say, well, this is what I did. I expect, to do the same or 2% better. Well, your coverage may not allow you to even look back at that. You may need to help prepare a different forecast under a different set of rules and assumptions, especially if your coverage is premised upon a government mandated shutdown or stay home order, in which your alternative world is with the pandemic. Also, if you didn't have a forecast and your industry was potentially going to be affected by what a lot of people were saying was going to be a financial downturn, you need to take that into account. Even if you don't believe there would have been a financial downturn, the insurance industries may offer the opinion that they expected your business to decline, not grow. You need to be prepared to handle that rebuttal analysis that's going to come from the insurance company as part of their rebuttal of your claim.
Well, and I think that's a really important point, because we as experts, and that we testify in court, our job, our goal is to create a supportable, reasonable analysis that is based on assumptions and it's based on opinions that we provide, but we come in to try to educate the judge on the reality. And that's where, I think most of the time when I talk to business owners, they either think the sky is falling or everything is wonderful. Whereas as an expert, we come in and say, okay, but let's look at everything and let's see what all of the picture says to us, just what some pieces of it are. So I think that that's part of the importance of an expert in this process.
I think we bring a level of objectivity to the analysis. You think that your forecast that you prepared is perfect, is right, is the best estimate. My first response is, that sounds reasonable to me, but show, support, and substantiate. How did you take into account external impact or possible impact A, B, C, and D? How did you incorporate that? Are they incorporated? How can we show that you documented? How can we show that you considered it? How can we support what you prepared so that it can slide very nicely into the analysis that's associated with your business interruption claim? And again, associated with these COVID-specific types of claims, support, documentation, and substantiation are going to be critically important to helping you substantiate your claim.
Okay, so we've talked about a ton of stuff. I think this is great information for business owners kind of going through this crisis. is there anything that we missed? Do you have any additional things that we should talk about? Or should they just reach out?
I'm happy for anyone to reach out. I think we covered most everything, but very importantly, don't forget step number one. Pull out your policies, read your policies, make sure you follow the rules and your obligations. Make sure that a date doesn't slip by. If you file a claim too late, you're going to have a problem. Make sure that you're aware of it. Make sure that you're looking at it. If you talk to your agent and they say there's no reason to even do it, that may not be the best course of action. Just because you were denied once doesn't mean it's the end of the process. There are options and alternatives to help you move forward if you think that that's the right financial decision for you. And each business owner needs to look at this on their own. And to make that decision, they need to have an idea as to what they think their claim is. If they think their claim is relatively low, it may not make prudent financial sense to move forward by hiring a bunch of people to help them. If they think their claim is significantly large, it may be relatively easy. If there's a low limit on their business interruption policy, they may not need to put a fine point on every piece of the calculation. They may just need to show that their losses significantly exceed their limit, and then they'll pay out at the limit. So there may be simple alternatives that can really help these business owners, and they need to look through it, assess this, and make sure that they make a good, solid financial decision that's in the best interest of their business.
One final question is, if a business owner is confused, right, or is so focused on trying to just get through this crisis, could they work with somebody like you, just to review the documents, to give a preliminary idea of what this loss could look like, to kind of just do a little bit of footwork? Obviously, there would be a cost, but to do some of the beginning legwork and say, does this make sense to move forward, or does it not make sense to move forward? And could there be something that you could help in that respect?
Absolutely. The way we work at my firm, we don't have standard turnkey solutions. If you need some help, give us a call. We'd be happy to give you a hand, whether you need the entirety of a claim prepared or you want help in analyzing and investigating the claim on the front end. The one thing I do caution with is, while you can hand a lot of this over and get help from an external provider, a consultant, a valuation expert, to just turn over and to expect that you're going to hand over a stack of documents or just tell them to go and provide no input whatsoever is unlikely. They are going to need help from the business owner. They're going to need help at least gathering, organizing, and making sure that they have an understanding of your business, how it operates, what you were projecting, and how you were harmed. They need to make sure they understand those points. You will play a role, but in terms of the financial modeling, the calculations, the documentation, the support, handling all of the details, absolutely, there are a lot of service providers that can give you a hand. It's just about finding someone that you're comfortable working with, that's got the right background and skill set to help you achieve your goals.
This was such good information. I appreciate it. Again, we have Chris Johnson. He's an economist. He's also a business valuation expert located in Houston, Texas. His company is Economic Analytics Consulting. We provide all the contact information for him. So reach out if you have some questions regarding this topic. I've known him for quite a while, and I think he really knows what he's doing. So again, this is valuationpodcast.com, bringing to you all sorts of things about business and valuation. So thank you so much, Chris.
Thank you, Melissa. I appreciate the time.
All right.